Hey, good morning, everyone. Brian Hoops here with Midwest Market Solutions. This is Market Insider TV and our opening commentary Wednesday, November the 20th. Thanks for joining us this morning as we take a look at our trading day ahead. I'll be doing RFD TV not only this morning at 8:15, but also Thursday, Friday morning of this week, and the Commodity Wrap podcast on satellite. Sirius Channel 147 satellite radio. That'll be airing this afternoon. Yesterday I was on WHL Radio as our guest market analyst talking about these markets and where we are going from here in the grain markets. Let's look at some overnight trends as we see the dollar firming up here, and that's one of the important bylines to talk about is that dollar is firming once again after a few day correction. Now we're seeing the market firming. Crude oil is a little higher. Stock market is higher, but off of overnight highs. And gold and silver are mixed. A little bit higher gold, but silver is down. Grains are all lower. 2.5 lower corn. Beans almost 9 cents lower. Oats are the only thing trading higher. After touching limit down yesterday, we're 7 cents better yesterday in the overnight, and the wheat's 1 to 2 lower in the March contracts. But look at the July Kansas City new crop down in nickel in light overnight volume. As far as weather goes, let's talk about that, as that is one of the main features of trade, along with that U.S. dollar. Those are things really that we're focused on, is what happens with the U.S. dollar, what happens with weather in South America and in the United States, and then also Trump trades, do we enact tariffs against China and any other countries? So weather looks very good for corn and soybean development in South America. Crop ratings are very high. They should continue to stay high as rains are forecast for the next 7 days. The U.S. hard red wheat areas have received really good rainfall, and we're going to continue to improve conditions going into dormancy. So far in 3 weeks, we've improved 11% in good to excellent ratings in the hard red wheat belt. Coming up this week, we have December grain option expiration. That is Friday the 22nd, and then first notice day is Friday the 29th. That's the day after Thanksgiving. Means you could be reported on Wednesday the 27th. So I would really stress, if you have anything related in December futures, to move out of the way of them, whether you're long or short. I would not continue to try and trade the December contract. Roll out of it, move to March or another contract month, and just move away from December. Overnight, new export news is quiet. We have Jordan tendering for 120,000 metric tons of milling wheat from optional origins. No doubt it will not be from the United States. And Taiwan is tendering for 80,000 metric tons of milling wheat, and that could come from the United States. So there's a possibility that the U.S. will get some of that export business from Taiwan. In the cattle market, we've seen pretty good rally in the last couple of days in the cattle futures. This week's Cattle Facts show us it's down 6,000 head for a total of 212,000 head. We've heard a lot of calls lower this week, but with the smaller show list numbers and the futures already discount to the cash, don't really see that the cash is going to trade lower again. I'm looking for at least fully steady this week. Packers look to use maybe this week and next week to slow those kills and improve negative margins. They have not slowed the kills this week. They tried last week. They're back to more of a full kill pace this week. But next week, Thanksgiving holiday, we'll have a smaller kill, no doubt. So I'm looking at, again, fully steady in the cash markets. December futures closed at 186.50. That's $1.50 premium over the where the cash markets are. So that could be a little friendly for this cash markets this week. And finally, coming up this Friday as well, monthly cattle on feed report comes out at 2 o'clock Central Time. A Bloomberg survey has on-feed supplies at 99.9%, placements at 103.4%, with marketings at 105.1%. This is not quite as bearish as the numbers that I had seen or reported earlier, where I was looking for over 100% on-feed supplies and placements at closer to 5% more. But again, this is a little bit negative with placements larger. And then we should get much tighter supplies, tighter placement numbers as we go through the winter months. So this looks to be a little negative report, but could be the last somewhat negative Bloomberg cattle on feed report. All right, I'm going to sign off and wish you a great day. Hope you have a chance to tune in to our TV appearances and the podcast this afternoon. Good luck, good trading, everyone. And as always, we hope to talk to you soon.